Hello everyone. Today is June 8th, week 4 of my vlog as a value investor. So as you all know, I'm aggressively absorbing everything I can investing related. And in my pursuit of knowledge, I came across a group called the Digital Asset Sisters. Apparently my cousin is best friends with one of them. Long story short, I signed up for their Crypto Start program about 2 weeks ago, and I'm actively learning how to invest in crypto digital currencies. I'll plan to do so in the form of a 50-50 split, half into crypto and half into stocks. Reason being is that investing in stocks is very different than speculating on crypto. It is a very new field for me, so I feel best that I diversify versus going all in on crypto, as some people have suggested. Sorry. So during one of the live calls we had, they reminded me about one of the best ways to time the market, and that is to buy when there is fear. I haven't been trading for that long, but one of my more successful trades was when I started buying Tesla at 280 and bought more as it dropped to 220 at a dollar cost average of 250. I then proceeded to sell when it shot back up to 280. So basically what I did is I recognized the fear in Tesla and bought more as it dropped, knowing that it was going to rebound. It was hard to ignore the fear in Tesla. It was all over the news, literally dropping from about 450 all the way down to 220. Of course, later on, it continued to go up to about 350, which could have been a seriously good trade. I wish I held on to it a little longer, but that was just one of those things. So buying when there is fear in the market is by far one of the most important and profitable things to know. And if you can implement it into your trades, then you will be doing better than 90% of investors and traders. Another tip I've learned in my personal experience is that dollar cost averaging on a fearful stock as it falls works best on growing companies versus companies that are dying, because a dying company can drop real fast if you aren't careful. Another great way to ensure that the stock will rebound is when you buy a stock well below its intrinsic value. That way, if all else fails and it doesn't rebound as quickly as you thought it would, then you will have the confidence of knowing that it will go back up. A good example is the stock I currently hold is Crocs. They are basically as cheap as they'll ever get. I was pretty confident that I bought the lowest it'll go, but it still dropped by 20% even after I thought it couldn't go down any further. When you're confident that a stock will rebound, then you won't panic when it drops unexpectedly. Instead, you'll see it as an opportunity to buy more, which I plan to do so. So this last week, I haven't made any new changes to my portfolio. I'm still 100% in on Crocs. I'll let you all know how that goes. If y'all feel you learned a thing or two, then please like and subscribe.